Hey everyone, welcome back to Corporate Decoder, the place where we break down the financial jargon and legal fine print so you don't have to. Today we're diving into Talon Capital Corp's latest report, and let's just say there's a lot of newly minted money and new leadership taking the stage, so buckle up. Alright, so what we have here is a Form 8K, which is basically a report that companies file when important things happen that the public should know about. Think of it as the official announcement of major company news. For Talon Capital Corp, the big news is all about their recent initial public offering, or IPO, which is when a private company starts selling its shares to the public for the first time. The earliest event reported here happened on September 8th, 2025. This is when their registration statement for the IPO was declared effective. This means all the paperwork was in order and they were officially cleared to start selling shares to the public. This company, Talon Capital Corp, is based in the Cayman Islands, and this report shows they are now trading on the Nasdaq Stock Market LLC. When a company goes public, it's a pretty big deal. It means they're raising a lot of money and opening themselves up to public scrutiny. Now, let's talk about what exactly they sold to the public. They sold something called units. Each unit is like a small package that contains one share of their company, specifically a Class A ordinary share and a third of a redeemable warrant. And these warrants, which the ticker symbol is TLNCW, are essentially options that give the holder the right to buy the company's Class A ordinary shares later on at $50 per share for each whole warrant. So the company issued these Class A ordinary shares, which have a very tiny value assigned to them on paper, just a fraction of a cent. This is pretty common for newly public companies. In total, Talon Capital sold 24,900,000 of these units. This number actually includes some extra units that were sold because the people who bought them on behalf of the public, the underwriters, decided to buy a few more than initially planned. This often happens if there's a lot of demand for the shares. They sold these units at $10 each, so if you do the math, 24.9 million units at $10 a piece means they raised a massive $249 million from this public offering. That's a huge amount of money for a company that's just joined the public market. To make this whole IPO happen, they had to sign a bunch of agreements. One of the most important ones is the underwriting agreement. This agreement is between Talon Capital and the underwriters like Cohen & Company Capital Markets. It basically lays out all the terms of how the underwriters will help sell the company's shares to the public. Then there's the warrant agreement. This document, signed with Odyssey Transfer and Trust Company, details all the rules and regulations for those warrants we talked about earlier, making sure everything is clear on how they can be exercised and who the agent is. They also have what's called an insider letter agreement. This is an agreement among the company, its directors and key officers, and the main sponsor, Talon Capital Sponsor LLC. This agreement likely covers certain promises and restrictions for these insiders, ensuring they are aligned with the company's goals, especially during this new public phase. We also see an investment management trust agreement. This is really important for IPOs like this, often called SPACs or special purpose acquisition companies. It means a big chunk of the money raised from the IPO is put into a trust. This money is held in trust until the company finds a business to acquire or merge with. Odyssey is the trustee managing this money. There's also a registration rights agreement. This gives certain shareholders, usually the early investors or sponsors, the right to have their shares registered with the SEC, which makes it easier for them to sell those shares down the line. They also did something called a private placement. This means they sold some units directly to specific investors outside of the main public offering. We have two of these agreements, one with the sponsor, Talon Capital Sponsor LLC, and another with the representative, the underwriter. Specifically, they sold 530,000 units to the sponsor and 249,000 units to the representative. These were also sold at $10 a unit, bringing in another $7.79 million. This private placement is exempt from registration under securities laws because it's not a public offering, often relying on a section of the law that allows for private sales. Now let's look at leadership changes. Effective September 8, 2025, two new people joined the board of directors, Sean Reynolds and Thomas Simons. This means the board now consists of Charles Latham, Sean Reynolds, and Thomas Simons. New directors often bring fresh perspectives and expertise, which can be crucial for a company navigating the public markets. With these new directors and existing ones, the company also entered into indemnity agreements with Charles Latham, Gerald Simidor, Sean Reynolds, and Thomas Simons. These agreements are essentially promises from the company to protect these individuals by covering their legal costs and potential losses if they face lawsuits related to their roles at the company. This is meant to attract and retain talented leaders by reducing their personal risk. Another significant event is the filing of their amended and restated memorandum and articles of association. This is like the company's constitution or bylaws. It sets out the rules for how the company is run at the most fundamental level. With these amended articles, they are now authorized to issue a lot more shares. We're talking up to 2,000 million Class A ordinary shares plus Class B shares and preference shares. This gives the company a lot of flexibility for future fundraising or other corporate actions. Remember that $2049 million raised from the IPO. A big part of that, along with the money from the private placement, went into a trust account. This is typical for these types of companies, as the money is meant to be used for a future acquisition or business combination. Odyssey is the trustee managing these funds. There are some specific rules about when and how this trust money can be used. Generally, it's held until the company completes its initial business combination. However, the company can use a portion of the interest earned on the trust account for working capital needs like paying for operational expenses. But there are limits on how much they can take out, and it can only be from interest, not the original principal. This money in the trust account is also protected for the public shareholders. If Talon Capital doesn't find a business to merge with within a certain time frame, which is September 10, 2027, in this case, the public shareholders get their money back. This time frame is often referred to as the completion window. The company also put out a press release on September 8th to announce the pricing of their offering, and then another one on September 10th to announce the closing of the deal. These press releases are like the official announcements to the world that the IPO is done. Interestingly, the form of the indemnity agreement is not fully detailed here, but is incorporated by reference from an earlier filing, their Form S1. This means if you want to see the exact wording of those indemnity agreements, you'd have to look at that older document. So to wrap up the main points, Talon Capital Corp just completed a massive IPO, raising nearly $250 million. They've also entered into key agreements, brought new directors on board, and amended their foundational documents to allow for more share issuance. A significant portion of the IPO cash is held in trust, earmarked for the future business combination or to be returned to shareholders if that combination doesn't happen within a set time frame. Now for my take. Talon Capital is essentially a blank check company, a SPAC, formed to find and merge with another company. They've successfully raised a substantial amount of capital, which is a strong indicator of market confidence in their ability to execute their strategy. The new board members could bring valuable experience, but the real test will be how effectively they deploy this capital. The clock is ticking on the September 2027 deadline to complete a business combination. If they can find a solid target and integrate it successfully, they could see significant growth. On the flip side, if they fail to find a suitable business or the subsequent merger falters, shareholders could see their investment returned, which isn't ideal for generating long-term wealth. The key risk here is execution and the ability to identify a valuable acquisition target in a competitive market. What's your take on Talon Capital's IPO and their future prospects? Let me know in the comments below. If you found this breakdown helpful, please give this video a thumbs up and definitely subscribe for more deep dives into company filings. And don't forget to join our Discord community linked in the description for more discussions. Thanks for watching, and I'll see you in the next one.